Hey guys, welcome to today's trade breakdown. Today is Wednesday. Actually, once again a expansion day. We are trading at all-time highs. AM session was really difficult. That's the day you can see right here. Really expanding on the daily chart. Extremely bullish. A bit too, I don't know. I think it's really insane how extremely bullish we are trading to the upside without any higher time frame retracements, really. So yeah, we see some down close candles right here, but that's not really a retracement. So we're still just rallying higher, and therefore we don't want to look for shorts. We don't want to predict the top. That's really important in that case. So with that, we drop to the hourly chart. What we can see right here, new day opening gap. Asia retraced lower, from there on only traded higher. So that's basically it. We did sweep New York open kill zone, sells liquidity, and from there on kind of now have really high resistance trading higher. So definitely difficulties trading higher. Not like ES. ES, as you can see right here, is really expanding higher aggressively, and NQ cannot really follow. With that, let's drop to a 50-minute chart. So right here you can see the opening prices as well. Midnight opening price down here, only barely traded below it. London low is or has to be our low, or we would like to see that London low stay intact if we are in trending conditions. And yeah, you can see that we really have kind of this also unfinished market maker sell model right here. But in that case, we do not really expect that we reach external sell liquidity, because we are just in a strong bullish trend, and therefore we have to be content basically with reaching the lower quadrant. That's really important, and also because we also sweep the New York open kill zone, says liquidity, that has to be enough. On the 5-minute you can already see that we have really high resistance in here, lots of huge wicks to the downside, but yeah, was actually quite possible to trade still today, I think, in my opinion. Before we drop low to 1-minute chart, I want to show you, as always, also regular trading hours. So that's also kind of important always to me. Right here, your new opening range gap, 233 handles. Premium trending, new open range gap. We failed actually to reach the upper quadrant. But in that case, because we just did fall short of it with only a few handles, to me that's basically we met the objective in that case. Not really clean. Can also present or regard it as a only up day, like we had yesterday as well. Such strong trending conditions are not really easy to trade. We are just rallying higher, and every retracement, if we even get a retracement, is basically a potential actually to go long, and it's kind of a bit difficult because we either have high resistance and consolidation, or we are just expanding higher. I don't really like to trade all-time highs actually. I think it's not really easy, and I don't like basically also to kind of chase price, because I think we are definitely buying right here over board conditions. But we have to adapt, so we cannot predict the top, we cannot short anything in here, and we basically have to adapt to the opening conditions and trading conditions, what we get. So today was kind of a bit more, I would say, a more how you call it, I don't know, chill day. Today I had my exam, so I was only trading on paper, and actually came a bit late into the opening. Already right here, I think that with the opening just trading lower right here, we should be done. Why? Because we trade below the important expansion right here. I think we kind of also reached original consolidation. I don't want to see that we actually take out London lows. To me, then we are not really bullish. Therefore, I expect that with the opening trading lower right here, that this is already our manipulation, and we are actually able to buy fair value gaps going long. Right here, this is just too early. But yeah, with the strong down close candle right here, to me that's right here basically also sweeping engineered SSL liquidity. So that's actually perfect to see. From there we want to see that we close above CE of the order block, and from there we enter. And then we just target buy sell liquidity, in that case also the 830 opening price. Actually I missed this trade. Was just once again, as mentioned now before, late in the opening, and therefore was not really into what we were delivering today, what we have for conditions today. Had to mark out all my important levels, and therefore I really entered late. I think right here also wanted to be a bit more patient with reaching our 10 AM macro, but in that case our 9 AM manipulation to the downside is already occurred in that case, and we are in a market maker buy model already. I think in that case we are only trading a lower time frame market maker buy model, because we are definitely also in a higher time frame market maker buy model, but in that case we are going to see more high resistance. Why? Because we have just really I think really bad structure in that case, really not a good price action structure. We are not trading into a high time frame PD array. I mean, yes, we are trading into the hourly fair gap right here, but we have such a huge wick to the downside, really unfinished business. Therefore this wick also trades basically back into it. And we have no really higher time frame PD array in that case, despite the hourly fair gap, and therefore this market maker sell model is kind of unfinished, and we are really starting to have some troubles trading higher. But nevertheless, this trade would have been still perfect. I mean, 1.9 risk to reward almost. That's what we want to trade, and I think it's really high quality. Stop below the engineered stop out right here. So and that's would have been perfect. I entered late and was therefore aiming for a bit higher prices, and that was once again definitely the wrong approach. If we enter late, we maybe so either we don't take the trade, or we still have to be content with a lower risk reward, maybe only a 1-to-1 or something like that. It's just it. Re-entered right here. Stop out or stop rate, how I interpreted it. But I think it's really difficult. So we have this huge wick to the downside. Definitely I want to see that the 5-minute expanded higher, as we did basically now. But in that case, we should have not already re-entered this with such a huge wick to the downside, as I showed you before right here. So the 5-minute wick, huge wick to the downside. That basically means that we're either going to re-deliver to the downside, or that we at least kind of have to trail our stop even below CE of the rejection block, and that's really a difficult risky reward. I mean, if we are in low resistance conditions, that's definitely possible, but in that case we're definitely not. Regular trading hours is not really clean. We are already expanding above our regular trading hours new open range gap. So once we basically expand above our, how you call it, AM session liquidity, from here on it's only high resistance higher. So that's basically the trade yesterday we took right here. So yesterday where did I enter? I entered after we closed above CE, so right here, and only aimed for AM session liquidity, because as you see right here, we have only high resistance higher, and therefore we should not really expect so much afterwards. And that's today once again the same case basically. Once we I don't know, kind of sweep AM session liquidity, so after stop out right here, we once more reach higher into the in that case it was the 830 opening price and also the buy sell liquidity. We have really high resistance to trade higher to maintain our speed to the upside. Should have not really re-entered with such a aggressive wick to the downside, but got stopped right here. Also re-entered right here. I think I'm content also with the trade right here, because now we kind of cleared up the high resistance in here, and also did some damage to the sell side. So I think I'm content with that, because also the lower time frame right here looks really clean with this down close candle, this instantly up close candle above CE, using also CE right here. I think in that case that's a valid trade, and also going break even to me is really valid. And then also with 1030 we are going to expand higher, so that's our 1030 market maker buy model, and I took this trade actually on a once again on a paper account, a other paper account, because you cannot see the executions right here from before. I've now basically also started a challenge for only a 25k account where I only trade 2 contracts and not more than not more than that, because I think I'm just more comfortable with trading only a 50. So like trying to pass a, how you call it, not 50k but 25k account. So I'm more comfortable with that because I've already achieved it. Also, that's also a really big milestone for me. But yeah, I took this trade. I think in that case it's really high quality. Why? Because we stayed so long in consolidation. We have now reached 1030, and what we see 1030, the 5-minute candle right here opens up and completely basically a big close to the upside. So above even the down close candles right here. So with that, we have basically also a CSD, change in state and delivery. With that, only trading or closing above the wick right here, that could not be enough for me. I really like to see that we basically close above the both down close candles right here. Why? Because this candle is the, how you call it, lowest down close candle. So the body which closed is the lowest. That's the candle right here. I look at both because they are consecutive. And once we trade basically above it right here, that's to me a really strong CSD, so change in state and delivery. And I now want to see that our higher time frame, so our 5-minute is going to expand higher. Yeah, back to the upper quadrant level. Because we have a high resistance market maker buy model, that's what I want to see, and that's basically what we did. And then we just look, okay, where do we have basically our liquidity resting near that, and that's right here, and we scrap that. So yeah, really a high quality trade. Yeah, trade back into the fair gap and from then expanded higher. Yeah, definitely high resistance, but still, I think I'm definitely content with the trade right here I took. So yeah, that's the breakdown. I think I learned a lot today on such days where we have really high resistance trading higher because we have no clear structure, and also where we have a only up day where our New York open range, no, how you call it, our new open range gap is also in trading conditions, and we have also there on the regular trading hours chart not really a clear structure. I think it's important to have a more lower risk to reward, so therefore we only aim for a small expansion above AM session liquidity or something like here. So the first trade high quality, though is not really because we are just stuck in high resistance, we have no clear structure, and then with 1030 definitely this once again is a high quality trade because we're going to expand on the 5-minute chart. We have a strong CSD on the 5-minute chart. And yeah, I think that's basically it. Hope you learned something new. I really like the engineered SSL liquidity right here, so that's a really high quality trade. Yeah, unfortunately missed out on it, but still definitely was able to apply my trading approach today. And yeah, I think that's basically it. So hope you enjoyed it, hope you learned something new, and see you soon.